Hello, everybody, and welcome to this special episode of FieldLink. I'm Bill Smith, your host. Today, we're going to dive into the USDA Grain Stock Report. And joining us from Nashville will be Jody Lawrence from the Strategic Trading Advisors as we deep dive into the U.S. Supply report for grains and how they'll impact growers for the 23 growing season. Thanks for joining us here on this special episode of FieldLink. Yeah, and we want to welcome Jody Lawrence back to FieldLink as we talk specifically today about the USDA Grain Stock Report. That was just recently released by the USDA here last Thursday. Jody, welcome to FieldLink.
Thank you, Bill. It's good to be back. Lots to talk about. The January report's always a big one to set the stage for the next year. So big numbers to talk about.
Yeah, definitely. We saw a lot of movement, a lot of action in this year's report, this January report. Corn looking like it's down 7%. Jody, what are the analysts telling us about that specific number going down by 7?
Well, just kind of the general overview for everybody to catch up if they didn't dive into the reports. The USDA came in below what we were expecting in acreage across the board and harvested acreage, and they also lowered U.S. ending stocks. So that was kind of the bullish foundation for it. They made some upward adjustments in yield. They raised U.S. corn yield to 173.3, which is a great crop when you consider how dire the situation was in the Western Corn Belt for all those major production states, Nebraska in particular. And that was up a full bushel from their last yield update in November and about 0.8 of a bushel above what the estimate was from all the private analysts who did their surveys with their farmers. But because the harvested acreage was cut right at 1.4 million acres, and 1.6 from the last USDA report in November, and about 1.5 below what the estimate was. There was only 79.2 million acres harvested of corn this year. So that abandonment and was a little bit higher. And really, when you start getting into corn numbers, the acreage number is always more important if you're looking for, a big move as far as the total crop. Because if you trim 1 million acres, that takes out, in this case, 173 million bushels right off ending stocks and right off production. Whereas if you trim a half bushel off total yield, you're only trimming that, it might be, 40, 45 million. So the acreage was a big deal. It was bullish for corn. That's pretty substantial this late in the game, pretty substantial move. And it'll be interesting to see how this kind of plays its way out. What that does, just to find kind of vindicate everybody, was wondering, and we've talked about this a lot, why basis on old crop through harvest was so much better than it normally was. And this could be a combination of maybe some overestimation from previous years, but also it certainly could have been the fact that there were, 150 to 200 million bushels from this year's crop just not out there that the USDA expected. And I'll stay on the U.S. stuff for a while, and we'll get to Brazil and Argentina in a minute. But on the beans, the total crop came in a sizable number, right at 90 million bushels below expectations, and the harvested area was dropped 321,000 acres. So that's a good start. The same math applies that it does from the corn, that it's always a bigger movement in the total crop when you adjust acres rather than yield. And yield in beans case, and why beans were up so sharply yesterday, and old crop March remained solidly over $15, is that the yield was cut under 49.5, and that was, uh, gosh, almost 2 full bushels below trend that they expected at the planning meetings and their economists in February, March of last year, and then even during early planting. So the bean crop in the U.S. came in lower than expectations, and it's reflected in the price. Although uh, exports have been solid for beans, they haven't been spectacular by any sense. But corn's been downright disappointing. So we're in an interesting spot. Now what you have to do, transition when we're early January. You have to look at what's going on in the Southern Hemisphere and South America in particular. And in South America, when you start looking at it, we're talking about Brazil and Argentina. And their weather pattern right now is they're in the transition from La Nina to El Nino. You are seeing very inconsistent weather, very dry weather still in Argentina, and their crop ratings and their crop potential yield was cut accordingly, while Brazil sits in the garden spot, and they are in a position that they'll be able to make up a whole lot of what Argentina may be losing. But Brazil and Argentina's total crop for corn came in at 177 million metric tons, and a million metric ton of corn for all of us that can only do bushels is 39.4 million bushels. The way when we're out speaking, think about it this way: anytime you see a million metric ton, when we're talking about a world estimate of something, just think that it's 40 million bushels of corn, and that's between the two of them, that's a 7.03 billion bushel crop. Ours was right at 13.7. So they're producing, between Brazil and Argentina, roughly half of what the U.S. will produce in corn. While on the other side of it, the beans are where they have a distinct advantage over us, and it's really Brazil, because Brazil and Argentina's crop came in at 198.5 million metric tons, and a million metric tons of beans is slightly smaller. It's 36.7 million bushels, so you can think about that as just 37. But in between Brazil and Argentina, they are going to produce 7.3 billion bushels of beans this year, that China clearly has been buying and investing money through the years to get their production and their infrastructure up for better exports, where the U.S., even though our crop was diminished with the 49.5 bushel per acre yield, you're talking about a total crop this year in the U.S. of 4.276 billion. So they have a distinct advantage of being able to outproduce us in beans by 3 billion bushels. And as they continue to add acreage, Brazil in particular, because it seems like they have an unlimited supply of rainforest to bulldoze down, or new area as their infrastructure gets better to get to some of the more remote regions, to be able to grow in a 12-month cycle. So, and beans are clearly more favorable when you talk about their tropical climate. So the bean production war, we are behind Brazil. We are ahead of Argentina, but the two of them as partners, we are significantly behind them. So that's where, when you get an issue like we have this year, where Argentina, who is a huge exporter of bean meal into the world, when you see bean meal over the course of the holidays and into early 23, making new contract highs, if not every day, certainly it was on a run where they were making new ones every week. Argentina's loss helps U.S. farmers to be able to make some really profitable sales. And whether you're talking about making new crop, which after yesterday's trade, November 23 bean price bumped up to $14, that we were able to get a good price when the U.S. is having no weather problems whatsoever. So that's what I always encourage farmers to look at it this way. Think about where we are on today is we're recording this on Friday the 13th, which I'm not crazy about, but it's still Friday the 13th. Add 6 months to that window. And if you were sitting in a situation where you had either great rains or terrible growing conditions on July 13th, you would really have an idea what your crop potential was. So that's where Brazil's crop is in great shape, although they did trim it slightly from the most optimistic estimates, which is great because it's going to keep bean prices stabilized. But they did trim Argentina's crop, not as much as some of the private local analysts have it trimmed to, and you're still talking about that number as they go through the next 6 weeks to 2 months could be very critical for where the price of beans are when we get to the field in April and May.
Yeah, definitely a lot happening in Brazil and Argentina, and definitely impacting the overall global supply there, and going to drive some of the decisions that producers are going to have to make for 23. Jody, let's pivot a little bit to the wheat market. How did the wheat supply chain or supply report turn out for you?
The wheat numbers were also a little bit bullish. They weren't quite as bullish as the corn, certainly not the beans, because the number that offset the smaller ending stocks and the smaller world stocks, or slightly lower world stocks, was the winter wheat seedings in the U.S. is expected to go up about 1.1 to 1.4, depends on which estimates and kind of which reporting service you're talking about. But when you're talking about a national 60 bushel yield, whether it's hard wheat, soft wheat, whichever variety they're growing, you're in a position when the U.S. Expands its wheat acres, that's going to be bearish, just like anything, because you just run into the situation where high prices motivated a lot of people to add some winter wheat or some full season wheat come the spring into their rotation. And as the rest of the world has produced big crops, we've seen wheat go from $13, $14 shortly after the invasion back down to where we're trading now in the mid $7 range and mid $8 range on the soft and the hard varieties. So wheat is still profitable at these levels, but certainly not the darling when people were looking at $9, $10, $11 a bushel back when they made the decision to plant the winter wheat in September, October at the end of harvest.
Well, yeah, and from my understanding, we're down 7% based on U.S. Supply there, and that's a 15-year low. But then Ukraine and Russia really having a pretty decent crop, from my understanding, raising some of those global supplies as well.
Yeah, Russia's crop, and you have to take whatever Russia information gets out into the world news channels with a grain of salt, but they have told the world that they produced nearly 10 million metric tons more than their last year's crop, and about 8 million metric tons. And on wheat, it's the same, 36.7 like beans. So you're talking about an extra 350 to 400 million bushels that Russia says it produced in the middle of a war. Not that the war was active in the big Russian production for areas for wheat, but it does seem odd that their numbers went up by about 7, high enough that you look at what Ukraine's went down. It's not a complete wash, but it does give you some. It's making some of the wheat watchers scratch their heads about how much of Russia's crop was actually stolen from Ukraine.
Yeah, definitely, and makes you scratch your head a little bit. And then you have to ask yourself, is that wheat going to actually get exported from Russia to other countries? Who knows? There's lots of questions still hanging over that specific area, but definitely impacting the overall market globally. Jody, Let's talk a little bit about cotton. That seems to be also kind of falling into the similar category there. Lots of questions around cotton as we look at this report.
Yeah, the cotton report was a little surprising because as prices have backed up, we were trading, uh, uh, about a year ago, we were trading cotton substantially over $1. I can remember seeing some $1.25, $1.30 trade, and now we're trading old crop at 82 cents and December 23 just a little above 80 cents. And cotton, really the culprit there was, although the Texas crop and a lot of the plains crop was decimated by drought, the demand for cotton, because China was in the middle of enacting their zero COVID policy where they were shutting down everything, China being the demand engine for cotton, really was shut down uh, for the last 6 months. And they have made a change, so cotton, it'll be interesting to see what happens with cotton. But they are the cotton lack of demand more than offset the losses for yield for the Texas crop, and that's why you see cotton trading back here at this 80 cent level, the 80, 81 cent level, and which is unfortunate for anybody who wants to grow cotton, is below and well below, in some cases, the average cost of production. So unless there are some farmers with really deep pockets or really low cost of production, December cotton's in an interesting position, trading right. The last tick was right at 81 cents. That will there be a large switch? We've seen some wheat acres. The wheat acres go up, and are those West Texas, Texas Panhandle cottonlands that decided to plant some wheat to avoid starting a crop off on a negative cotton crop off with negative numbers behind it. And then if you look through the southeast, cotton is really at a disadvantage to beans, because if beans, you look at November 23 trading $13.90 to $14, they are profitable. They're not as hugely profitable as they have been, but they're still profitable. And when you talk about making a decision between planting cotton that you're going in behind the eight ball on, or switching over to beans just by switching a header and buying some different seed, there'll be some cotton producers that have some really tough decisions in the Delta and in the areas where they can swap out row crops for the cotton. And that's really yet to be seen, because 80-cent cotton is not going to motivate anybody to plant it. So cotton could be a very dynamic market, a slowly emerging but very dynamic market, because if let's say the number was cut down to 11.5, 12 million acres of planted cotton, something pretty significant, then you get into a spot where all this starts again. China reopens from their zero COVID, and they're about a month into that, and so far so good, because certainly their economy and their demand, if you look at the world export lines, not just in cotton but beans and across the board, their economy appears to be changing course. And if China comes back to be a really big buyer and needs the cotton to mill and produce all of the cotton-based clothing that China is always the major producer of, then you have an interesting dynamic that you have lower cotton acres and the demand snaps back. So 80-cent cotton to me looks like a real value, but it's not something that I expect to wake up one Monday morning or after the end of a good week and see cotton back above 95 to 98 cents. It's going to be a slow decision process, and the USDA, you think about these numbers and planting being so far off, but here we sit in the middle of January. The USDA will update and put out their initial estimates on planted acreage at their big winter economic meeting, which is at the end of February, and then all the acreage surveys and estimates will start to come out shortly after that. So we're only 6 weeks away from really having an idea how much these prices are going to shift production and intention on farm. The good thing about it is the input prices uh, aren't nearly as high as the concern that we had, say, a year ago with all the logistics issues and even creeping into the spring and early summer because of the dramatic fall. The warm winter, in particular, in Europe helped this, but the dramatic fall in natural gas prices and in diesel and crude for a period of time, the all the nitrogen-based products that use so much natural gas to be produced, they those prices have moderated. In some cases, you could say they've softened, but they're certainly not being run up by the logistics issues. The Mississippi River is refilling as we speak because I know it's raining in Memphis because I just talked to my dad before we did this broadcast. And it's you've got some things that are going to bring or at least flatten the input costs this year across all the crops, which makes it which makes the decisions for all the farmers who are right now in the middle of prepay. You know, what makes more sense, what makes more money as they do their balance sheets and they do all of their beginning of the year P&L statements. That prepay right now is a great time, and we will get a lot of information in the market and through farmers through prepay. And in 6 weeks, I'm going to be really interested to see just what decisions everybody is deciding to make because corn is still favored. You've got December 23 corn just under $6 at 5.97, and if you are optimistic, especially talk about all our valued customers in the Western Corn Belt. If this transition does happen and you see the storms rolling through California, the enormous snow totals that you're seeing in the Rockies, that some of these aquifers that feed all the Western Corn Belt are going to be recharged. And if that moisture comes in and the Southern Plains and the drought monitor gets significantly better, you're going to have to make some early sales and you're going to have to make some decisions because the genetics, the stewardship of the ground, and just the talent on farm and helping everyone on farm. We're we're a good growing season away from a 182, 183 potential corn yield. And while everybody wants to win the yield contest and be on that trip to Aruba with the seed company, the problem always is the cannibalistic nature of agriculture, that you want to produce every bushel you can on your acres, but higher production means more product. And without a demand engine just yet, then when you have more supply, that means you have to, the price is almost certainly going to go lower. So in an interesting spot right here where I'm still a little more cautious and concerned that we could get pullbacks in new crop rather than a substantial rally that we seem to have gotten used to since the fall of 20. That every year if procrastination turned out to be the very best marketing plan, and I don't think that's going to be the case this year.
A lot of good points there, Jody. But when we talk about demand, you referenced China starting to loosen up, but impacting that cotton market, for example. There's going to be a lot of other demands that are going to kind of fall into that same kind of scenario, from a supply demand side of things, just the consumer side. How do you feel? Do you think it'll be a game day decision for a lot of producers in terms of their planting intentions, especially when we talk about soybeans and kind of the volatility there and maybe, I guess right now, the opportunity versus cotton and as well as some other crops?
Exactly. And I do. I think that you will have decisions made on crop rotations, not in the big fat part of the Midwest where they have invested, years and millions of dollars to get their soil profiles up, and that rotation is what they're sticking with. But when you start
Sure.
talking about the Delta and you start talking about, the South and over into Texas, where they do have an economic decision to make, then they're going to have to go right to the end, because you look at, and really, I think the defining factor in this is going to be, you go back to the Federal Reserve rate increases, everybody's line of credit is 3.5% higher in 23 than it was in 22. And when you start talking about, average size farm is almost certainly working off a line of credit, average, 2,500 to 3,500 acres, $1 million line of credit, that's $30,000 a year just in interest that can't go back into your operation. You can't hire a new man. You cannot buy equipment, rent more ground, whatever it is. And I think the bankers and just the lending industry in general is going to have enough impact on those decisions that you certainly don't want to actively encourage anybody to borrow money who is doing something that looks like a losing proposition at the beginning of the process.
So it feels, Jody, like as we take a look at 2023, still a lot of moving parts. We have a pretty good handle on our current grain supply and lots of across the U.S., but still that global market's definitely going to impact some of those planning decisions for 23 for many growers.
Absolutely. And, next 6 weeks are going to be critical to see where we get spring weather. Obviously is the next major factor after that, but it becomes difficult looking down that over the past few years, we've had a lot of areas with significantly delayed planting, and whether we've been saved or you're just talking about a new kind of weather pattern, that we've had very extended summers, and you can call it Indian summer, like our grandparents did, where you've had no early frost and you've been warm deep into September, that have really helped put some top end yield on this crop. So, it's always the same set of factors this time of year. Do your very best on working prepay to keep your costs down. Start making sales if you are in that marginal area, because at 597 corn, it doesn't take too much, because we've already had, 20 meetings, I guess, and we're really just kicking off the season. The more I'm out at these meetings and talking with all of Helma's customers and everybody that's out there farming, it doesn't take long. And 30 cents in this corn market from this side will make a huge difference, because if you're counting on 180 bushel per acre and 30 cents, next thing you know, okay, well, your cost of, or your gross revenue just went down $54, and $54 in 21 and 22, it stung, but it wasn't the difference between making or breaking even. And this year, when you talk about it, I sat down with some farmers, and they were nice enough to show me their P&L sheets, their spreadsheets, what they're looking at. And when you start talking about some of the larger yielding areas, people that are expecting their APHs at 230, 240, to effectively manage this and keep the type of agronomy program that they've been working with, you're talking about $1,300 to $1,400 all in to just get started to plant an acre of corn. So that is, you're really getting to a point that the margin for error on corn and not so much beans, because beans have got a little more wiggle room, but on corn, 30, 35 cents this year could make a really, really big difference on that bottom line. One last thing before we get out of here. We've talked on all the podcasts lately, and the one earlier this week, about hedging your diesel cost. Crude oil bounced again off $70 a barrel, and we're all the way back up to 79.30. There was some apparent disruption in the Nord Stream gas pipelines, odd and end things in Russia that are contributing to this. But the big picture is if China comes back, the price of energy, whether it's natural gas, whether it's diesel, whether it's unleaded gas, are going to be firm and continue to go higher. So with that, you've got, you've got diesel trading all the way back up to $3.14 a gallon, and we were just trading at $2.90 earlier this week. So when you see March futures trading anything, below 305 now, because I think we're kind of moving up to higher plateaus where there's going to be support. Continue to top off your tanks and start making arrangements with your supplier for your spring and summer needs.
Definitely, growers have to really keep a close eye on the supply as well as markets, and working with their lenders and really sharpening that pencil up as we enter into 23 and begin those planting intentions. Jody, want to thank you for joining us for this special edition of FieldLink as we cover some of the details into the USDA Grain Stock Report. And Jody from Strategic Trading Advisors in Nashville, Tennessee, thank you for joining us. Jody, what's a good way for folks to reach out to you?
Well, we're going to be on the meeting circuit this year, so check with your local Helena representative, especially through the Midwest, the Northern Business Unit. I'll be in Memphis at a couple of events at the Helena Products Group, which is always fun to see the lab tour because those people are certainly smarter than I am that develop all these great products. And easiest way, send me an email at jblawrence@comcast.net, or just pick up the phone, give me a call, shoot me a text, 615-948-2378.
Great advice here as we take a look at the energy market. Jody, appreciate you again for joining us for this special edition on FieldLink as we covered a lot of the details around the USDA Grain Stock Report. Thanks for joining us here on FieldLink.
Thank you, Bill, and everybody have a great weekend.
I want to thank everybody for joining us here for this special episode of FieldLink. We hope that you find value in this particular report as we covered the USDA Grain Stock Report with Jody Lawrence. Thanks for joining us, and stick around for our next episode of FieldLink.